This week, you and I were in Washington, D.C. The Federal Open Market Committee voted to raise the federal funds rate by 25 basis points. Let's just start at the top. Did you support that decision?
Yes.
Okay.
No, I did support it. I thought it was a good next step for the committee. We had talked about as a group the level of the policy rate that we were looking for. If I recall the dot plot correctly, I think all the dots are above 5%. So and maybe one wasn't, but basically the preponderance of the committee wanted to be above 5%. So this move puts us above 5%. We've done a lot in the last year or a little more than a year. But we have a lot of inflation in the US economy and more than we've had since the early 1980s. And so I think it's appropriate to put the policy rate at a higher level so we can try to get the inflation problem behind us sooner and get back to the 2% inflation environment that we enjoyed earlier. So, I did think it was a good decision here at this meeting, and I thought it made a lot of sense.
You know, the range of possible outcomes for the economy is still quite large. Some people talk about a hard landing. Some people talk about, well, we're trying to achieve a soft landing. Some people are still saying there may be no landing, that inflation is just going to continue. When you think about these range of possible outcomes, how do you weight these possible different destinations? And then what does the Fed need to do to achieve the soft landing that I think we all agree we want to achieve?
Yeah, I mean, on the hard landing side, I think there have only been 4 recessions in the last 40 years in the US. So it would be a minor miracle indeed if we could happen to predict one 6 months or 9 months ahead of time. So I don't think you should have that as your base case. We live with recession probabilities every day. And things happen, shocks happen, and yes, the economy could go into recession, but that's not the base case. I think the base case is slow growth, probably somewhat softer labor market and declining inflation. So that would be the soft landing scenario. And I think all of you should put most of your weight on that scenario. And then, yes, there are risks out there. Other things can happen. We understand that, but I wouldn't make those, the base case. You don't want to make, the meteor coming from outer space and hitting us. You want to understand that risk, but you don't want that to be your base case. So there's a wide range of outcomes, a lot going on. I think we're going to get into it in the other questions here. Maybe just comment on today's jobs report, which was stronger than expected again. So this is 12 reports in a row that Wall Street has been surprised to the upside. Guys, maybe you should change your model a little bit. That's 12 in a row. That's never happened as far as the chart I saw today anyway. So I think unemployment lower today than it was a year ago. And the lowest since 1969. So job openings 40% higher than they were in 2019 before the pandemic. 40% higher. So this is a very tight labor market. It's going to take a while to cool it off. And I think we have to be patient on that dimension and understand that. So the rumors of the imminent demise of the economy are greatly exaggerated, I guess, is what I would say.